Well, here we go once again. And is John? No, John. What? John, do you have a toupee on? Wait a minute. Who is that? Oh, that's our man Mark Lepresti is back. It's good to see you, Mark. How you doing today? Uh-oh, did he freeze? He froze and he left.
No.
He's
We
you
just
know what?
lost Mark.
He was so offended, Jared, by what I said. I think. Well, that's okay. We're going to kick it around a little bit, but before we do, I just got to say this. That crazy brother of mine, my business partner, well, he's out there swooshing his way around the mountains back there in Switzerland, having a great time doing his thing. And I'll tell you what, he said early on this morning, he goes, not a chance. I go, what does that mean, not a chance? He goes, I'm not going to be there today. He got a lot of issues, and he claims he's got issues, Jared, with how the feed is over there and all that. Do you believe that, or do you think he's out there having a couple of cocktails and maybe a bottle of wine with a bunch of people on the slopes?
I think he's having a fine time.
I'm sure he is. Well, we'll hop into it, and I think that Mark will probably join us fairly quickly. And if not, Jared's going to be bouncing around with me on this. But nonetheless, I think Mark Lepresti will be back pretty quickly. I think there he is. He's bouncing back.
He's back.
He's back, baby. It's like Costanza. He's back.
Technical difficulties persist in the world. So my apologies to you, Pete.
Oh, none. No need at all. Hey, Mark, let's jump into this macro minute. We were kicking things around, but we're going to jump into it right now. So you and I were talking about this before we came on, and obviously one of the biggest things that I think is affecting the markets, and we're seeing it with some of the earnings that we will hit one of these names, but how about the debt world? I mean, we are just people I don't think are fully grasping what the debt looks like in the world, credit cards for homes, for all different types of things. I know you've got a lot more details on it than I do right now, Mark. So go ahead. Tell us a little bit more about it.
Well, super frustrating, Pete, that this is not something that's more closely tracked or talked about by the Fed or Fed governors, but the American consumer is literally drowning in debt. Average household debt right now is almost $170,000. That is an astounding figure for a total of $17 trillion in total household debt in the United States. That's almost an 8% increase year over year. And what really happens is, what is the typical American consumer's response to inflation? Put it on the credit card, right? But the problem is those chickens come home to roost eventually. The personal savings rate is on average its lowest in 50 years. That's a very terrifying statistic. And we see this impacting bank earnings. We see this impacting credit card processors. We see this across the board. So the health of the American consumer, not so great right now.
I hear you, and I think you're dead on. We've been talking about that for a while now, John and I, about this debt, and it seems like, to your point, nobody's even talking about that. First off, we're going to hit now, though. We're going to go to the materials world, Alcoa. So they come out with their earnings, Mark. They miss on the earnings side of things. They lost a little bit more than they were expected to lose. Demand was dropping. There was a lot of different issues. Energy, the costs there are huge. You look over at the revenue, that was down 7%. Across the board, there was almost nothing that you could look at and say, you know what, this looks like a positive right now. And you can see that by the reaction of the stock itself, which was heading south pretty rapidly. It was trading right around $50. Not a terrible number, but it was definitely pulling back for sure. Margin issues, I think, going forward will definitely be a problem. Aluminum prices are down 8 to 10%. Is there anything positive that you can take away from this one at all, Mark? Or are you with me that they've got some problems right now?
They do have some problems right now, and it worries me. You know, stocks and names like Alcoa tend to be bellwethers for the larger picture in terms of industrial manufacturing and what the demand picture looks like, right? And they got hit essentially, Pete, by two things, right? One, rising interest rates. Of course, it costs companies more money to borrow, which means it costs them more to make stuff. Simply put, that was part of the situation with Alcoa's earning picture. The other was the cost of natural gas, right? They had some significant spikes in their nat gas supply costs, particularly in their Australia production facilities, which comprise a pretty significant part of Alcoa's overall operations. The only bright spots, maybe they benefit from the reopening of China. Maybe they benefit from switching from nat gas to other power sources, which they've already started to do. but I'm not touching this one based on what these earnings look like.
I agree with you. And next, we're going to go right back to where we started here with that macro minute. We were talking about that, and we talked about, in this particular case, Discovery. Look at those numbers that they put out, Mark. I mean, it's a little bit scary, I think, as well, because we're talking about the charge-offs. And one of the things that stood out most for me was they set aside a little bit of money. Well, they thought they were going to do $620 million. They decided, you know what, we're going to probably have to make that number a little bit closer to nearly $1 billion. They're going $883 million set aside for a lot of these credit losses, the potential of what's going to happen there. Revenue was up. That's great. Loans are up 20%. That sounds great. I'm not really sure that is great, because I think that's just building more and more debt out there, Mark. What do you think about these numbers? This is a stock. It has bounced off of the lows from this morning. It was trading about $95. Now it's around $100. But what do you think about this particular name right now, given all of the numbers that we were just talking about, including the macro side of things?
I mean, listen, this is something that I covered a week ago today on the great friend of ours, Liz Clayman's show on Fox Business. That was a show, by the way, John opened and I closed. I don't think that was intentional, but it was fantastic. But my segment was called The Bank Stock Bears, right? And I covered this ahead of the earnings that were coming out the next day, JP Morgan, Wells Fargo. And I said, look, I think they meet or beat, but the stocks trade down. Why? Because of this very precise problem that ties into the macro. They're not, a lot of analysts thought, hey, rising rates, they can make more on that spread, what banks borrow from the Fed versus what they can lend at. But the reality of it is the consumer credit picture for the retail-focused banks is so poor that I think you're going to continue to have comments like this. And whether they meet or beat, they're still going to trade down.
The next one we got up for you is in the energy space, and this is an energy that actually not too many people recognize this. You do, I do, but they're basically a green energy play, and a lot of people, I think, have looked past that. Now, Kinder Morgan, Richard Kinder is unbelievable as a founder and as a guy who decides to buy his own stock on a very consistent basis. It just seems like he's an absolute machine. Well, he's doing it for all the right reasons. I'm actually a guy who's had ownership, so I got to put that out there. I think it's since 2017, but they're talking about $1 billion share buyback by the company itself. And they also have great growth going on right now from an earnings, great growth when it comes to revenue. They've obviously got the pipelines, but we're talking about liquid gas. And that's something that I think a lot of people just look past that. You and I were talking about this before, but I'll tell you what, there's a lot of reasons to like this stock. They've got an incredible amount of free cash flow. Everything seems to be moving. Now, the one thing is, it's not a sexy stock. That's why I think a lot of people push away from it. But I do think it's a sexy stock because of the fact that they give you a huge dividend. They've got a great, balance sheet. And this is a company that's moved into the green space underneath the radar of everybody.
Yeah, this is one that's thought of as a traditional sort of old school, Texas midstream player, and they are, right? They've been around for a long time, and they are significant market share. They don't get credit for their green commitments in the green parts of the business and LNG. And look, I think part of the share buyback you're talking about, Kinder's not a stupid man. This is in part, the way I read these tea leaves, Pete, at least a view on where the market's headed for gas. And when you look at even today's numbers in nat gas coming down significantly in the past couple of weeks, an indication that they're going to start going in the opposite direction. I'm actually bullish on energy for the next quarter or two, assuming no unforeseen global macro circumstances come into play. But I like this one too. They're old school midstream with a new school green energy play. I like it.
Yeah, I love it. I'm right there with you. Next, our last one for the day on our top four. How about Bed Bath & Beyond? Now, this is a name that's been around for a while. We've talked about it. They've had multiple CEOs over the last couple of years. Nobody's been able to fly this plane right. It just continues to go down, 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 down. It did bounce the other day. I'll say that. It went from about $1 and change all the way back up towards $4. Now it seems like it's on the path back down again. Mark, when you look at this company, you look at the debt level, that's unbelievable. It's about $3.5 billion in debt. They're burning about $500 million a year in cash itself. I don't see any positives at all. I'm looking at the bonds, as a matter of fact. The bonds are now trading 8 cents. Now, August of 2024, if this thing actually could be alive and maybe cracking and those things actually come into play, that would be fantastic. I don't really see that happening. As a matter of fact, a month ago, those were trading at 24 cents. People were taking shots at it. Now they're trading 8 cents. I'm sure people will take shots at that. But what do you think about this name? Is it got any life left in it, or is there a lot of problems still that just aren't going to get fixed?
It reminds me of that old Monty Python movie, right? It's not quite dead. Oh, you'll be stone dead in a minute. Listen, I think they're definitely in the beyond part of the business plan at this point. You know, everything that went on with the pop in the stock recently, that was all driven by the meme stock crazies. You know, I always caution people not to get caught up in that FOMO. Let them play, let them have their fun. You miss out on some profits, but man, when it goes in the other direction, you can really get creamed. Sometimes we look at names like this betting on a bankruptcy bounce. If it's a restructuring, we don't know yet. But I am staying as far away from the stock as I am staying away from the actual retail locations, because I don't know if your lovely bride has ever dragged you into a Bed Bath & Beyond, Pete, but I would rather have needles stuck in my eyes than go through BB&Y stores.
Well, I tend to be with you, and I just don't understand. At one point in time, it made sense. Bed Bath & Beyond actually made a little bit of sense. But now when you go to Target, you go to Walmart, you go to a lot of these other stores, it doesn't make sense. Why do I need to go to Bed Bath & Beyond? I don't. And so, you know, maybe toilet ought to be added to that Bed Bath & Beyond toilet or something. I don't know. But it's going down, and it doesn't look too good. All right, next, we've got some options we're going to talk about. You were talking just a minute ago about some of the energy and some of the bullishness that you've got there. We all know that crude over the last couple of weeks or so, it's gone from 72, got up to 82. Now it's hanging around 79, 80 bucks, made a nice run to the upside. Nat gas also has been interesting, although it's been hammered pretty good, and maybe we'll see a move in that. But how about copper? Nobody's talked about copper in a long time. Copper's made about a 12% move in the last couple of weeks as well to the upside. So it makes a little bit of sense what we're seeing today. Freeport-McMoran, 10,000. February, 44 calls being bought for about 2.25. Now, they're not just going out and buying these calls. They're buying these calls, but they're hedging it, and they're selling the 47 calls for a little over $1. So they're into that trade for, call it maybe $1.10 or something like that. Looking for that move to the upside. Not looking for a violent move, but a move to the upside. I like these kind of trades. I think this is a smart trader. Stock was trading right around 43.75 at the time. I like what we're seeing here. I think it makes a lot of sense. And I know you've got one as well, Mark. So what have you got for us on the unusual side of things?
Well, I certainly like that bullish activity. I think it leads, connects very nicely to our overall, or my overall bullish outlook on energy. So I think that's a very smart trade. It's a cost-effective way of taking a bullish position on that stock. I've got the bear to your bull today, Pete. We've got some bearish put buying in SQ. SQ, of course, is Block Inc. This is the company that our viewers will recall own companies like Square and Cash App. We saw 22,000 of the March 65 puts bought for between $4.50 and $4.80 above open interest. The stock around 70 3/4, 71 bucks. Coming out with earnings on the 23rd. And look, I think this story is, to bring it back to our macro minute, which is nice to do when we can, this is about what is anticipated to be a decline in consumer spending, a decline in consumers using maybe some of the buy now, pay later financing features that are available through some of these things. We had an upgrade from Baird 2 weeks ago. I didn't really understand that Baird upgrade, didn't agree with it. This trade is consistent with what I think is an overall bearish outlook on the stock. I like the trade.
I tend to agree with you on that one. And that one stuck out on top of everything else. Just think of the dollars that went into that trade. I mean, it's a sizable trade, number one, and the dollar amount of those options they're buying, that's a very large number out of the money. And it's something that I think is very, very real. All right, Mark, you've got the Venture Minute, baby. Battlefin, what do you got for us?
Yes, well, so today's Venture Minute is brought to you by Battlefin Group, Inc. And we are talking, of course, about Battlefin's upcoming and much anticipated Miami conference. This will be our 11th. We've done Miami event every year for 11 years now. And this is a company that focuses on alternative data. It will be familiar to the members of the Rebel Nation and our viewers. They've heard us talk about the company a lot. I co-founded the company. You and Peter are investors and advisors to the company. And this is a company that delivers data that is used by the biggest asset management firms in the space, many of which will be with us next week in Miami for this conference. I'm talking about Point72, Ballyosny, Millennium, all of those big top money managers. But this is not about Battlefin, or about the data. It's about the conference. I will be keynoting and headlining. So will John. I saw Jared just popped up the graphic a moment ago. We're going to have some fantastic speakers like retired Brigadier General Anthony Tata, a very dear friend of ours, who's going to help me unpack battlefield data. He had some very interesting calls around, how long the Ukraine war was going to start, when it started. We're going to be looking back at the accuracy of those calls and how we think we're going to use data to determine what the ultimate outcome and duration of that conflict will be, along with a lot of other fantastic guests and information. So if you haven't already, please join us. Go to battlefin.com, Battlefin Miami. We're going to be down there once again from the 25th to the 27th. So looking forward to that and getting the heck out of the cold here in the Northeast.
That sounds great, Mark. I love it, man. And you know what? Miami's going to be beautiful. I can tell you firsthand, Sarasota area where I live, it's looking pretty good today. It doesn't look too bad over here on the West Coast either. I threw on my ball cap because you know where we're going now? We're going to the Sports Blitz. And here's what I've got for you. We've talked about this one before, but what I think a lot of people looked past, Mark, was I called this Herschel Walker trade 2.0. And why do I do that? Well, Russell Wilson, as we were all remember, last year it was the biggest trade that we've seen in a very long period of time, left the Seattle Seahawks, goes to the Denver Broncos. They've got the GM. They've got the new coach. By the way, that new coach is already gone because of what happened, because Russell did not live up to what he was expected at all. And maybe that will change. But with that trade, they got a number 1 and a number 2 last year. They also got 3 other players, Mark, in that trade, that 2 of them were first-round draft picks when they came to the team in Denver. They all went up, and they're in Seattle, and Seattle made the playoffs this year and turned into a heck of a football team that I don't think everybody expected. Geno Smith leading the way. They got the number 9 pick in the draft. They got the number 40 pick. Well, this year, it's not over, by the way. And here's why it's 2.0 times 2. They're going again, and they get the first-round draft pick this year and the second-round draft pick this year. They've got pick number 5 is part of that Denver trade. Pick number 20, which is their own. They've got another pick coming in the second round with their own second rounder. They are going to build what I think is going to be a very, very interesting team. Remember how the Dallas Cowboys did this whole thing when they sent Herschel Walker up to the Minnesota Vikings with all those the picks that they got and the players that they got, and suddenly that was a team that went to the Super Bowl on multiple occasions, right? Is that something that could happen at Seattle? Maybe. Pete Carroll's hoping so. The guy's in his 70s. I played for Pete. I played for Pete back in 1986 and 87, Mark. He's still coaching. It's absolutely amazing. But what do you think about this trade? This is a really big deal. This is an amazing trade that I think everybody at first thought Denver fleeced Seattle. I never thought that. I thought Seattle had it, and I still think Seattle's got it. What do you think?
Well, hence the Herschel Walker reference, right? I mean, that was considered one of the greatest sort of fleecing, surprise, grab bag trades in NFL history. You had to go back to, what was that? Just a year or two after you were playing for that coach, Pete. That was back in '89, if my memory serves me correctly. Yep. So we'll see. It's going to be very interesting to see how this pans out, for sure, especially for Seattle fans.
I'll tell you what, and they have great fans, so they deserve something, and I think that they're pretty excited about what's going on. The second sports thing we've got is the playoffs, and I just throw this out to you. Will every single home team win and sweep across the board? And, when you look at a Mark, it feels like that's really what is going to happen. I mean, I'm going to start off with the Saturday games, okay? The Jags are going up to Kansas City. Now, that's going to be a tough game. Kansas City is unbelievable at home. They have 1 loss all year to the Buffalo Bills. So a great football team. Other than that, they just went through it and it was no problem at all. So you've got the Chiefs at home, and then you've got the Giants going to Philly. We all know how good Philly is. Are the Giants pretty good? They're pretty good. I don't think they're great. I don't know if they can get past Jalen Hurts. If he's able to play at any kind of a higher level, I think that the Philadelphia Eagles, when you look at their offense and their defense, they are a complete team. And I think that is why they win at home. Then since he goes to Buffalo, well, Buffalo's ranked in the top 1 or 2 in every category there is, offense and defense. So it seems like Buffalo's got the nod there. Here's the one, and I felt this when you and I talked beforehand. I feel like you're leaning towards the Cowboys against the Niners. I really do. I think you're believing in this whole Dak Prescott thing. Now, just remember this. The guy's an interception machine. He didn't throw any against Tampa, but Tampa's pretty old and beaten up. So tell me what you think. Is that the one that you think is the one that breaks this streak? Is maybe the Dallas Cowboys going in and beating the Niners?
Well, it is, and look, you know that we are Cowboys fans in my house with our team redeeming itself earlier this week after a terrible previous week's performance. But I think the other possible exception to your home team rule, Pete, may actually be the Giants. I think they got a shot. So we'll see how that pans out. But we're going to be watching those games very closely.
Now, you got to be careful because you never want to bet with your heart, which is something I get caught up in doing a lot. And I know you're a New York guy, and all that kind of thing. So just be careful because I got caught up in that. I had Tampa because I loved Tampa last week. And boy, by halftime, you're just looking going, is there any chance at all that we even can put up some points for crying out loud? I mean, they were at home, but Dallas just ran them off the field. That's right. You never know. But I'll tell you what, if Daniel Jones plays anything like he did against the Vikings, I think you do have a legitimate shot to take that game. But he's going to have to do that. And he runs, he throws. I mean, the kid's far better runner than I think most people really fully understand. Well, Mark, thank you so much for filling in for John as he's swooshing down the slopes or grabbing a drink maybe at the bar or whatever in the world he's doing over there in Switzerland. I think he might be back next week, but be prepared on Monday or we'll just keep you in. You'll be in the bullpen because you never know with John when he's going to be back. But it's great to see you, man. And we are done for this week's Rebels Edge, but we'll be back on Monday, folks. See you then.
Thanks so much.